Ready, start. The new Income Tax Act 2025 is now set to come into force from 1st April 2026 after more than 6 decades of the Income Tax Act 1961. The country will finally move to completely a new tax law para. The main objective behind bringing the new Income Tax Act 2025 is not to impose new taxes but to make the law simpler, more structured, and easier to understand. Over the last 6 decades, the Income Tax Act 1961 had become lengthy and complicated due to continuous amendments. The Act had grown to about 819 sections with 511 rules and nearly 399 forms, making compliance difficult even for professional para. The new Act attempts to reorganize the entire law in a more logical and reader friendly manner. The number of sections has been reduced to about 536. The rules have been brought down to around 333, and the number of forms has also been substantially reduced. This clearly shows that the intention of the government is not to increase the tax burden but to simplify the drafting, improve clarity, and make the law easier to comply with. Para. While the government has presented the new law as a step towards simplification, taxpayers and professionals are now asking a very practical question: what will actually change from 1st April 2026? Will everything become over overnight, or will the old law continue to follow us for years? Para. The real challenge is not in reading the new law but in understanding how the transition will take place. Whenever a new law replaces an old one, the biggest issue is not the future but the past. Income tax matters normally run for many years, so the old act cannot disappear in one day. Para. From 1st April 2026, the new Income Tax Act 2025 will apply for the tax year beginning on that date. The government has replaced the old concepts of previous year and assessment year with the concept of tax year. Para. Income earned in tax year 2026 to 27 will be taxed under the new act, but this does not mean the Income Tax Act 1961 will disappear from that date. In fact, both acts will continue to operate side by side for several years. Para. All assessments relating to earlier years will continue to be governed by the old act. For example, if the department issues a notice for assessment year 2024 to 25 or 2025 to 26, the proceedings will still be completed under the Income Tax Act 1961. Appeals pending before CIT, ITAT, High Court to Supreme Court will also continue under the old law. Even reassessment notices relating to earlier years will be issued under the old provisions. Therefore, taxpayers should be ready to deal with two acts at the same time: the old one that refuses to leave and the new one that has just arrived. Para. This situation is not new in tax history. Whenever A major law changes transitional provisions protect actions taken under the old law. The new Income Tax Act also contains saving clauses to ensure that past proceedings, rights, liabilities, penalties, and appeals remain valid. Without such provisions, the tax systems would collapse because lakhs of cases are always pending.